But as far as the stock market goes, is this the right time to be diving into the market? On one hand, there are plenty of good quality companies available at low prices. But on the other hand, do you have the stomach for the volatility? Joining us to discuss how people should approach their investments and manage their wealth is financial advisor Alex Jamieson from AJ Planning. Thanks for joining us today, Alex. So this is the asset allocation conundrum right now. What have people been speaking to you what's resonated most clearly to you regarding asset allocation from your investors?
I think really a lot of the discussions we're having at the moment around this opportunity, going back to 1960, we know that we sort of see downturns happen every sort of 7 to 12 years time, and we're pretty much in line with that. And it's really a case of, well, how do we capitalise on this opportunity rather than be fearful and nervous and those things? What's the safest way to pick up some really good quality investment opportunities from an asset allocation sensibly and safely and capitalise on this current environment?
So would you say it's protection right now? Are we still in the protection phase of wealth management, or are we in the positioning phase of wealth management, as in positioning ourselves for that hopeful bull run? I can see you've got a picture of the Wall Street icon behind you right there.
Yeah, absolutely. I think if you're trying to find protection now, you're a bit too late to the game. You really should have been doing this as part of the late cycle of the bull run, coming into the cycle with, less exposure to growth. I think now, if you are underweight growth, now's the time to be pivoting towards pushing some of that money in over the next sort of 8 weeks' time and averaging in. Trying to pick the bottom of any market is really a difficult thing to do, but I think if you're looking at it on a week-by-week sort of basis and slowly moving small portions of capital towards the market, you're smoothing in your entry point, and certainly whether you're in the V-shape or the U-shape sort of recovery phase, or whether there's a retest, you're basically putting yourself in the best position to capitalise on it, we feel.
Hey, Alex, have you had a lot of your clients inquiring about early access to their super? It was one of the first sort of, stimulus measures that was rolled out by the government. Since then, though, we have had additional stimulus coming in the form of the JobKeeper program, for example. What's your sense about how many people are going to be using that facility?
So it's a tax-free drawdown. So there's sort of two groups of people. One are looking for the actual tax benefits with it, where they're making the lump sum drawdown. They've got some ability to make a tax-deductible contribution under their caps and actually take some tax deductions. And if they didn't use their limits in the year prior as well, they're basically taking advantage of that opportunity. So some are just using it as a straight-out tax play. Then you've got the people that are genuinely under pressure, and certainly for that group, they're certainly using that, logging into the MyGov website and basically capitalising on it. There are trade-offs, but certainly if you're under financial duress, you sort of have to, find opportunities to sort of put you through these next few months, and that's one way that you can do that.
And then as far as the allocation conundrum goes here, we've got a lot of people who've moved into risk-off assets. That's when the market was falling. Now we've seen quite a big recovery from our lows. But just how difficult is it for various market participants to decide how much should they have in fixed income and the costs of actually moving between those assets?
Yeah, so our position at the moment is you should be sort of looking at your normal sort of defensive sort of play and underweighting that about 10%, reallocating that possibly to an overweight growth position. If you're looking at sectors in the market that have long thematical trends, so things like technology and health and those sort of areas that have really good solid tailwinds, that obviously helps from a level of confidence that you're in sectors that should do well into the future. So if you do miss the absolute low point, when we sort of look at that in another 12 or 18 months' time, you should be really well positioned, I think, from an upside return overall.
And as far as where we think this market is going to go to now, obviously very difficult to pick, but are you of the position right now that people should be taking more of a buy position for the long term, or should they be waiting and seeing for the next 6 months?
We've certainly seen a jump in the market over the last few weeks. Initially, there was basically some early pricing in of the virus sort of peaking, and so people wanting to get in before that virus peaked here in Australia. And then really there was some consolidation that took place, and and essentially we tracked sideways for a short period of time, and then as the virus sort of peaked both here and the curve was sort of flattening both in the US and over in Europe, there was some further pricing in with the market rising as well. We're sort of at this junction now at the moment with the market moving sideways, and really some of the things that they're sort of wanting to see some clear direction from government around what will actually the next phase of this in terms of unlocking the economy, unlocking businesses and people being able to get sort of back to normal. What sort of timeframes? The government sort of haven't really been really clear around that, and so I think depending on how long this goes on in terms of the lockdown mode, that will be a case of whether we track sideways, anticipate it for another few weeks and continue to move from there, or whether we go back and retest some of those lows. So it's a really poised point in time. But I think, again, as I said earlier before, if you sort of slowly stepping into this market on opportune sort of times, particularly on those down days, as a steady sort of methodical sort of approach over the next sort of 8 weeks, I think certainly you'd probably be, in another 12 months' time in a fairly good position with some of those purchases.
Alex, just a very quick one, but I'm wondering, just given the current state of the environment and the business that you're operating in, have you felt well taken care of by a lot of the fund managers, the income managers, fixed income managers? Are you getting a lot of support from the industry and allowing you to serve your clients to the best of your ability?
Yeah, I always say, the difference between a good fund manager and a bad one during these periods of time. The bad ones you never hear from and go quiet. And it's really sort of the real test. Most people can make money in a rising market, but in markets like now, it's sort of giving that insightful information. For us, it's kind of, that real high level insights. It's sort of trying to look a little bit around the corner to see what might be in front and what also are the opportunities. So, I was on a meeting this morning looking at opportunities around oil and what's going on in the oil industry and some of these areas in the fixed interest where we're seeing some really disjointed sort of markets. And it's a case of, what's the best way to sort of capitalize on some of these, panic sellings and, unusual sort of market dynamics to know that you can sort of capitalize that into the future within the client's portfolios as well. So I think largely the good providers, there's a reason they're good.
Mm-hmm. Yeah. All right. Interesting times. Alex Jamieson from AJ Financial Planning. Nice to have you on. See you soon.